Hi there, welcome back. You're watching Market Fatafat on ET now. Before we go ahead and talk about the big buzzers, let's shift focus to one particular stock and talk about Divi's Labs, because in the development that could impact Divi's Labs, a federal judge has rejected Novartis' motion to vacate the FDA nod for a rival generic version of its heart drug Entresto. Now remember, Novartis has a CDMO contract with Divi's Labs, and my colleague Varun is joining in with the details of how this development could affect Divi's Labs going ahead. Varun.
Let me first take you to the news because Novartis has lost the bid to vacate the FDA approval for its blockbuster heart failure drug Entresto, and this case was between MSN and Novartis. So actually what happened is, in the month of July, MSN has actually got an ANDA approval to launch the generic version of this heart failure drug, against which Novartis went ahead and they have filed a lawsuit against MSN. Earlier this month, the US District Court of Delaware has actually ruled against Novartis for blocking this drug, and now the federal judge has rejected Novartis' plea to stop the generic version of this drug. Now this is a big win for MSN and it is a loss for Novartis. Now how will this impact Divi's? Because Divi's is actually having a CDMO contract with Novartis, and Divi's actually supplies the API for this heart failure drug, that is Entresto. And if we look at the recent Kotak note, Entresto actually contributed around 8% of total sales of Divi's in FY24 and around 19% of its total CDMO sales. So it was a blockbuster drug for Novartis and one of the largest drugs in Divi's CDMO portfolio. And as per Kotak, this approval can lead to around a downside of 10% in the EPS of Divi's for FY26 and 27, and 3 to 5% downside for Divi's for FY25. So this is a big blow to Novartis and also a big blow to Divi's. But also remember, there are other companies other than MSM also who actually have ANDA approval for this drug, and they are Alembic Pharma and Zydus Life. So also keep a watch on these two stocks.
All right, keeping an eye out on that. But now on the technicals, we're joined by Chandan Taparia, who's the Derivatives and Technical Analyst, Motilal Oswal. Thank you so much, Chandan, for joining us. And of course, Ria remains with us on the research front. But Chandan, you've picked out HDFC AMC for us. Now, this counter is already hovering around its 52-week high. So what is the upside? Is there a further upside left, or how does one look at this counter?
Yeah, good afternoon. Thanks for having me. We have positive on most of the capital market stocks, whether be it exchange, AMC, depository, broking, and most of these stocks are really doing well. In particular, talking about HDFC AMC, it has been making higher highs, higher lows from last 6 trading sessions, and supports are gradually shifting higher. It managed to surpass the previous hurdle of 45.25, 45.45 zone, and after that, it can see the next leg of rally. If I look at the derivatives data setup, we have seen some build-up of long position. So with support of 44.45, this stock has potential to rally towards 5,000 marks.
Okay, well, so that's the view coming in on HDFC AMC from Chandan. But moving on, let's talk about Cesc, which is in focus on news that its subsidiary is all set to acquire Deshrad Solar Energy. Now, Purva Green Power Private, which is a subsidiary of Cesc, has entered into a share purchase agreement yesterday to acquire 100% share capital of Deshrad Solar Energy Private on a fully diluted basis. Now, Deshrad Solar will become a step-down subsidiary of Purva Green Power after this acquisition, and the acquisition, which is set to be completed within 2 days, is being done with an aim to expand the renewable energy business of the company, according to the exchange filing. Also remember, Deshrad Solar Energy is involved in the development of a solar photovoltaic power plant of 300 megawatt capacity in India. So positive news flow coming in for Cesc, almost at the highest point of today's trade, and 1.5% higher is where the stock is right now.
All right, that is Cesc holding on to its gains, but Bharti Airtel is the name that you have picked out for us, Chandan. Now, the Bharti Airtel definitely is one of the most picked stock by the techies as far as the telecom space is concerned. But tell us, what are you seeing on the charts for Bharti Airtel?
From last almost 6 years, year-on-year basis, it has been moving upwards. In the calendar year, the stock is rallied by more than 65%. Looking at the weekly chart setup, major trend is positive and every small decline is being bought. We have noticed that in last 10 days, it corrected from 1780 to 1635 zone. But now again base is shifting higher and major trend remains intact for the next leg of rally. So one can buy with support of 1680, and we are expecting Bharti to continue its positive momentum towards 1800 to 1820 marks.
All right, moving on to Big Boy Reliance that posted its Q2 results post-market hours yesterday. That is in focus today. Largely in-line set of numbers coming in as far as the O2C is concerned, the retail business, the gas exploration and telecom business are concerned. Largely in-line set of numbers coming in for RIL. Right now, the stock is reeling under pressure with cuts of 1.8%. But let's look at the numbers on a consolidated basis. On a sequential basis, revenue turned out to be flat. The EBITDA was up 1%. The margins came in at 16.9%, was 16.7%, and the net profit was up 9% on a quarter-on-quarter basis. So that's the screenshot of the RIL numbers. If you look at the segmental numbers, the O2C EBITDA was down 5%. The oil and gas EBITDA was up 2%, and the retail EBITDA was up 3%, which was largely in line with 18 hours estimates. Also, we saw that the ARPUs were up, but we saw a decline coming in on the subscriber base, but that was largely offset by the increase in the ARPU. Also, we have a couple of brokerages that came out and spoke about RIL, and Novama is maintaining a buy with the target price of 3,650 rupees. They feel that it was a difficult quarter, but they have stronger prospects going ahead. The EBITDA beat of 1% owing to better than expected show of O2C, ONG and digital segments looks promising. Systematics also upgraded the stock to buy and also hiked the target price to 3,145 rupees, and they feel that the weaker O2C and retail dragged the EBITDA, but largely they remain positive on the counter. However, RIL is reeling under pressure in today's trading session.
Absolutely, almost 2% lower, and in fact weighing on Nifty also is RIL in the negative. But the India Mobile Congress 2024 is currently underway, featuring top industry leaders sharing their vision for the future of technology. Bharti Enterprises' Sunil Bharti Mittal suggested that satellite companies should also secure network like telcos do, while KM Birla reaffirmed the company's commitment to its capex plans. Let's go across and listen in.
Satellite companies who have ambitions to come into urban areas serving elite retail customers just need to take the telecom licenses like everybody else. Be bound with the same conditions. They need to buy the spectrum as the telecom companies buy. They need to pay the license fee as the telecom companies do, and also secure the networks like telecom companies do. This is a simple solution which can be done on a global scale, and India can again show the way in this particular regard.
The company's 18,000 crore FPO, marking the largest of its kind in India, was met with overwhelming enthusiasm. It was oversubscribed 7 times overall and an astonishing 19 times amongst institutional investors. Fundraise has enabled the company to kickstart again its capex cycle. Vodafone Idea has already announced the next phase of capex detail worth $3.6 billion with 3 global partners, Nokia, Ericsson, and Samsung.
The scale and speed of multilingual data generation in India, which will drive the AI revolution, will grow exponentially. We request the government to expedite the updating of the 2020 draft of the data center policy that Indian data should remain in India data centers. Therefore, Indian companies ready to set up AI and machine learning data centers should get all necessary incentives, including incentives for power consumption.
All right, moving on then. Ria, you have picked out a couple of OMCs for us. In fact, of course, the fall in crude that we saw overnight of 2.5% is, of course, aiding these stocks. Give us more details on that.
Yes, so let's understand what has happened on this front. Now, OPEC has cut the global oil demand growth forecast for the 3rd month, and they have cut the 2024 global oil demand growth forecast to 1.3 million barrels per day versus their previous forecast of 2.03 million barrels per day. Even for 2025, they've cut this forecast to 1.64 million barrels per day versus the previous forecast of 1.74 million barrels per day. Now, the crude oil production averaged around 26 million barrels per day in September of 2024, which was down 604,000 barrels per day from August, which was led by Libya and Iraq. And following this, the US crude oil prices have fallen by more than 2%. And on the back of this, oil stocks are also buzzing away in trade. Right now, we are seeing HPCL, which is leading gains with up around 3.5% at the moment. And even the likes of IOC and BPCL are now up around 1 to 2% on the back of this.
Okay, so well, HPCL, BPCL, you have paint stocks also that are in action today on the back of the price movement we've seen when it comes to crude. But on that note, we'll slip into a very short break. You don't go anywhere, viewers, because when we come back, we'll talk about more stocks that are buzzing today. Hi there, welcome back. Thanks so much for staying tuned to Market Fatafat. You're watching ET now. Let's keep it going with all the buzzers in today's trade. And next up, let's highlight Lupin in today's trade, because Lupin has announced the launch of the first generic version of the Pred Forte, which is the prednisolone acetate ophthalmic suspension USP 1% in the United States. Now, being the first generic to be approved and launched, the company is entitled to 180-day competitive generic therapy exclusivity, and the drug is indicated for the treatment of steroid responsive inflammation of the palpebral and bulbar conjunctiva, cornea and anterior segment of the globe. Basically, it's for the treatment of issues with the eyes. Pred Forte had estimated annual sales of roughly $198 million in the US. So, well, it's a big product coming in for Lupin. They've gone ahead and received the approval. Also have a 180-day exclusivity for this product. But the stock, in fact, giving up its morning gains, rather lackluster right now, almost 0.2% higher.
All right, moving on to another counter that is in focus today, and that is Ola Electric. And why the stock is in focus today is because it has really, the share has really jumped 4% today, because the company has reported a significant increase in its market share. Now, the electric vehicle leader and now hold a 34% share in the India's EV two-wheeler space, and that's what the company said in their press release. But the stock is really seeing a rebound, coming amid a very challenging trend that the stock has been seeing. In fact, on Monday, Ola Electric we saw the shares extend their fall for the third consecutive session, which slipped by 3%. The stock has now dropped 44% from its all-time high of 157.3 that was scaled in on August 20th. But despite this decline, the script remains 15% above its listing price of 76 rupees. On the back of increasing market share, Ola Electric is in focus today, trading with gains of almost 2.5%.
Well, it's been a rough or a bumpy couple of weeks coming in for Ola Electric, because lots of news flows coming in. But let's shift focus from Ola Electric. And Ria, you've picked out Adani Energy for us today, and on the back of some Q2 updates. So tell us what these updates look like.
Adani Energy has come out with their provisional business updates for Q2 of FY25, and on this front, they've said that the Q2 project pipeline has come in at around rupees 27,300 crores versus 17,300 crores in Q1 of last year. So a big jump there. The total transmission network as well has come in at 23,269 circuit kilometers versus 19,862 circuit kilometers in Q2 of last year. The Q2 system availability has also been maintained at 99.7%, and the company also has one of the lowest distribution losses of 4.85% in India as of Q2. Now, the company has also recently bagged 3 new transmission projects during the September quarter, and the stock has actually just spiked up around 0.6% right now. So we're keeping an eye out on the stock on the back of this news.
All right, moving on from Adani Energy to Jindal Steel and Power. Chandan, Jindal Steel is what you've picked out for us. Tell us, what does the chart look like? 6 months, there hasn't been hardly any returns, 8% 1 month. It's been in a consolidation mode. Tell us from here on, do you see a breakout? In fact, today itself, if you look at Jindal Steel, it is down 2.5%. What does the chart say about this one?
Yeah, so if you look at the Jindal Steel, the stock has been falling down from last 3 weeks, making lower top, lower bottom. It failed to hold previous support of 1,000, and now the resistance is shifting towards 1,000. So till it remains below 1,000, it can go towards to 900 to 888. So structure is weak. Let it find some more stability before you start the next leg of it.
Okay, so that's the view coming in from Chandan on Jindal Steel. We have some numbers coming in from HDFC Life. The Q2 numbers are out, and from agencies we understand that PAT has come in at 433 crore rupees. We'll just wait by for some other numbers that are expected to come. But before that, before we talk about HDFC Life's earnings in detail, let's just move on and quickly shed some light on HDFC Bank while we get more numbers coming in. And HDFC Bank is in focus today on the back of a Jefferies note. Well, the note is rather positive, but the stock is not doing much. 0.2% lower, in fact, is HDFC Bank today. Jefferies has maintained a buy rating on HDFC Bank with a target price of 1,890 rupees. HDFC Bank is aiming to lower the loan to deposit ratio to 85 to 90% in the 3 years, and Jefferies believes that it may achieve this with a deposit CAGR of 15% and slowing the loan CAGR to 11%. The branch ramp up will also help them gain share in deposits, and loan growth will stay below or at best at the sector level is what Jefferies believes. They also see scope to lower funding costs, and that can lift NIMs going ahead. The PSL compliance won't impact profit by much, and the slower growth in the unsecured loan can keep credit costs in check. This is something that they're flagging off. However, on the back of this, they've trimmed their estimate by 4 to 6% to factor slower growth loan. Rather than that, they've maintained their buy rating with a target price of 1890 rupees per share for HDFC Bank, and that's Jefferies note.
All right, moving on then to another banking name. ICICI Bank is what you have picked out for us, Chandan. This stock has been seen consolidating for the last 1 month. Tell us, is this likely to give a breakout now?
Now it's at a key level, so because of that it can see a fresh breakout. If I look at the price history of last almost 15-16 days, the stock has corrected from 1365 to all the way to 1217 marks. So after such corrective move, a small follow-up is required to commence the next leg of rally. Anyway, the major trend is positive, and ICICI Bank can help the bank nifty to turn on higher side. So I believe positive bias could be there. It negated lower top, lower bottom. So with support of 1220, we can see for an upside to us 1310 in the ICICI Bank.
Okay, let's move on from ICICI Bank, come back to HDFC Life Q2 numbers because we have some more updates coming in. Let's quickly just pull up what's been happening. Net premium income has come in at 16,570 crore rupees versus 14,756 crores, which is up 12.3% on a year-on-year basis. We're seeing a slight spike also coming in the stock price, 0.7% higher after the numbers have come out. You have management expenses that have come in at 3,532.5 crores compared to 2,928 crore rupees, which is up 20.5% on a year-on-year basis as well. But let's talk about the net profit figure, because net profit has come in at 433, almost 433 crore rupees compared to 376.8 crores, which is up roughly 15% on a year-on-year basis as well. Now we also have the persistency ratios coming in. The 13th month persistency has come in at 82.5% versus 84% year-on-year. So there's a slight slip there. 61st month persistency has seen some growth. It's come in at 68% almost compared to 51.4% on a year-on-year basis. So this is what we're seeing with the numbers coming right off the bat for HDFC Life Q2. But well, yes, the stock in fact has slipped into the red and rather flat coming in right now on the back of this 13th month persistency. That's not looking very good for the stock right now.
Yeah, and we are watching out for a couple of other factors. Once we get more clarity on that, we're looking at the growth outlook for FY25. We also expect the margin trajectory for the second half, given the impact of the new regulations on the higher surrender value. So that is something that we are also watching out for. We will be watching out for the management commentary as well. But for now, HDFC Life has seen, a downtick, a spike down in the stock price of 2 odd points right now, but a sharp spike down. That is what we are seeing on the stock. But with that, it's a wrap on this edition of Market Fatafat. Snehi and I will take your leave. Thank you so much for tuning in.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.